Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, July 28th. It is 5:45 a.m. as I'm starting the video. As always, welcome new listeners to the channel. I appreciate you being here with me. Hit the subscribe button, and maybe at the end of the video you can hit the like button too if everything works out the way you want. Okay, we've got and also run this video at 1.25x. You won't miss a thing, and it'll increase your efficiency a little bit. We had a big after-hours session yesterday. We had a lot of the big names, Apple and Microsoft and Google and AMD all report. And then today we've got Jay Powell. We've got the FOMC statement at 2 p.m. and then we've got the Jay Powell presser at 2:30. Taking a quick look at futures. Not a ton going on, but more than I expected actually. ES is up about 0.2. NQ up about 0.3. Small caps are up 0.8%. Oil is up 1%. And then gold, I continue to watch that 1814 level. We're trading below that now. But it's something to watch today because if you'll recall last time when there was a Fed announcement, gold got really whacked. And it can go the other way too, depending on what he says. So usually an FOMC day is a volatile day for gold. So keep an eye on that. Over on the earnings front, we got some big names here this morning. We've got Boeing, Shopify, McDonald's, and Spotify. Those will be some names to watch for you. And also after the bell, of course, we've got Facebook. And then we've got Ford, Qualcomm, Lam Research, Semi-Name, Spirit Air, and PayPal. So those are some of the marquee names after the bell that we want to keep an eye on. Now, what I'm going to do today is run through some market keys that I'm looking for. I've been focused on whether we're going to get a regime shift from the tech-led market dominance to a potential flip into cyclicals. We've had signs of life this week. We've got a breakout in copper. We know that was up 4% 2 days ago. It's up 10% in just a couple sessions. And then yesterday it held its own. So that particular commodity is doing well. And then we had a nice day in steel 2 days ago. And then yesterday gave some of that back. But we have not seen the breakouts in materials, in energy, in financials, and industrials. And that's what I want to see, and in IWM as well. That's what I want to see for green light into cyclicals. As I've mentioned before a few times, we've had some head fakes. So I'm trying to resist that urge to, be the first guy in to a cyclical rotation. I think if we get that, there's going to be plenty of time to make a ton of money if in fact the whole market rotates into cyclicals. So I'm kind of holding fire on that. So, and also today, usually for me, heading into Powell, what you typically see in the market is either a flat line or just a little drift higher into the FOMC statement. And then you've got the initial knee-jerk reaction. And I'll say it again, if you've been with me any amount of time, there's the saying out there that the first move out of the FOMC is fake. So you see a big moonshot, be wary of that. If you see a big rug pull, be wary of that as well. I think it will take the balance of this week to actually for the market to sort out what's going on. But after that FOMC statement, and really the balance of the day, because the statement is what it is. Nobody's expecting anything, although the title of today's video is Wild Card. I mean, that is exactly why it is a wild card, because nobody is expecting anything. We've got the Delta variant out there. We've got China contagion fears, and that will give plenty of cover to the doves to say, you know what, now is not the time to talk about tapering. We've got Jackson Hole in 6 weeks. You know, if we want to do something there, let's see if COVID variant backs off and this China thing resolves at least in a neutral fashion and doesn't crater everything, or there's worldwide equity market contagion from China. You know, let's just wait. Let's kick the can down the road. So that's the expectation. But Powell and these pressers has goofed up in the past with a gaffe or said more than he wanted to say. So I think it's really the presser you got to watch out for. And the way those things go, you know, it starts at 2:30 and may end at 3:30, 3:45. And so now you're at the end of the day and into Thursday. And don't forget, we got that big bond auction, 7-year bond auction on Thursday that might jack around with rates. So there's going to be a little turbulence, you know, through the balance of this week. I wouldn't be too anxious to do anything. Now, if you're an active trader and you can take advantage of that volatility, that's a whole different deal. By all means, do that. So that's kind of my read on today and the balance of the week. Before we get into the charts, I want to share something with you. If you've been a follower of my work for any length of time, you've probably heard the notion that I put out there that if you as a trader get knocked off center at any point in the day, it's usually a good idea to back off, either step away from the computer, gather yourself, get your head back on straight before you go back into trading. Because if you're not on center, if you're not balanced, you're preoccupied or thinking about something else, you're just going to make mistakes. And that happened to me yesterday. If you'll recall, going into yesterday, I was long Apple. I was long the Qs. Let's see. I was long AMD. I was long Texas Instruments. And I was looking for a move higher into... I was looking for a pre-earnings run on FATMAAN. That's why I had the Qs. I was long Apple and AMD specifically for runs into earnings, and I was playing for a gap fill on Texas Instruments. So right out of the gate, I got a pop in AMD. I didn't close out my position, and then they went the other way on it, and so I had a chance to make some money on AMD specifically. Got a nice pop, but hesitated for just a second, and then they took it all away in one bar. And not only that, if you'll recall yesterday's session, it was just all soggy in the morning. And so after the first 20 minutes, I had been blown out of 4 positions and losing money, lost money on every single one of them, plus the frustration that I could have made a decent amount on that AMD pop that I didn't take. So for me, I was knocked off center. And honestly, I never really recovered. To my credit, I knew I was off center. I knew I was preoccupied with that loss. And I didn't do a whole lot the rest of the day. I had a couple little, nothing trades. But the damage was done. And, I just focused my efforts on looking at some charts and keeping the flow of the trading room going and whatever. Tried to be useful in other ways beyond, what, I'm going to try and make all that money back by 4 o'clock. That's a losing idea. And what I wanted to tell you, as a trader, it's not only something that happens in trading that could knock you off center, it's anything. You had a fight with your girlfriend the night before. You wake up with a summer cold or a sinus headache. You have a child home that's sick and needs your attention every 15 or 20 minutes. It could be anything. Anything that knocks you off of what you know to be your center. Recognize that. Understand that you're set up for a losing day. If you try to press forward when you know you're off kilter, that is a recipe for a losing day. So try to be in tune with what your core is, what your center is, who you are, how you feel, and then if you don't feel that way, do something else. Look for setups, work on your charts, clean the house for your wife, do some laundry, do whatever it is to be useful. Just don't try to force something that isn't there. So that's my little bit of wisdom for today, and that might be something you want to take a note on, but just kind of integrate it into your process that it's hard enough to make money when you're feeling good and all the stars are aligned. It's still a tough task. And when you're not feeling right for any reason, it tilts the odds against you. So take that to heart. So let's go through our charts. US dollar, we dropped below trend. That's going to be a falling dollar is going to be supportive of commodities. Falling dollars supportive of commodities. You're not going to hear a lot of noise till we lose this, if we do, this 200 down at 92 on the dollar index. And then you may see a game on in the scenario 2, which would be our cyclical regime shift. But the one thing we don't have is rising rates. Rates are still falling. And I've got that chart right here, the 10-year yields. We know we've been in a downtrend. We came down to the bottom of the channel, got a reflexive bounce. That was the head fake that a lot of people took last week, and then it got to resistance and has rolled over. Now, of course, Jay Powell's going to have a lot to say about that this afternoon, as well as that 7-year bond auction tomorrow at 1 p.m. If this yield pops this 130 and starts heading to 140, then combined with the falling dollar will have us well on our way to a regime shift away from tech and towards the cyclical trade. And here it is on TLT. We're still above trend. You'll remember that our toggle point, our pivot point for cyclicals, is a sell signal on TLT, which would be a break below this trend line. And then coming down here, the final, nothing's ever final, but a confirmation of a regime shift to cyclicals would be TLT dropping below the 200 and the 50 down here, and then be on a path lower on TLT, higher in rates. And you'll remember that was this trade over here with rates rising and TLT falling. That was the cyclical bonanza, if you will, earlier in the year. Taking a look at breadth, this is our number of stocks over the 50. You can see it's just hovering here at 40%. Not really bullish at all. Very weak breadth in the market. Obviously, we'd like to see breadth broaden out. And you would get that in a cyclical shift because there's a lot more there's a lot more names that fit that bill than, mega cap tech, which is where we're at now. So if we get that cyclical shift, we're going to see this percent above 50 jump up. Just taking a quick look at NIMO. This is the New York oscillator. We're at minus 23, kind of in the middle to lower part of the range. Nothing to really be hyper focused on at the moment. We did get a big drop in the NASDAQ oscillator yesterday. We went from minus 5 to minus 35. So, if there was a further sell-off in the Qs, we're going to be right back down here to minus 60, minus 70, in a heartbeat. We lost, we lost a good amount yesterday. We lost 30. And so now, another 30 and we're oversold again. So we got to keep an eye on that for the balance of the week. I doubt we would get there, unless there's some big whoosh after Powell or, like tomorrow. We wouldn't get down here like right away. But, we're down in the bottom 25%. So let's keep an eye on it. Equal weighted SPY, we're up here trying to break above this trend line, break above the box. 152 is your bogey. You break out above 152, the measured move is 158. Where does that come from? We got a $6 wide consolidation zone. Break out of that zone, $6 wide, 6 onto 152 is 158. And that would be a real positive development, because then, of course, our breadth would be expanding. Why? Because Apple is the same as JP Morgan, is the same as any other S&P 500 stock. So that is kind of what you want to see in a rising market. So let's look at SPY. We had the early weakness. We had a gap down. We came down here, and this gap was much wider. We went in and just left a sliver, the tiniest of slivers, unfilled. And maybe that's good enough for government work. But then we got a nice rise into the bell. Now, for the rest of the week, what the bulls want to see is a recapture of this trend, break out above 440, come up and break above 440, fill the gap, break above 441, and then break out. What I'm concerned about is we've got a bear cross of momentum, and we're right at that 50 level. So from a technical standpoint, was this a breakdown, back test, and then fail? Or was it a one and done? Breakdown, V recovery, and head out. I think a lot of that's going to depend on the market reaction to Jay Powell. If he says something that spooks the market, it's going to look like a back test and then fail. And in that case, I would be looking for price to come down to this midpoint line at 435. And then that will be a super big spot. And in fact, a break below 435 would open the door to the lower side of the channel down here at 431. So have that scenario somewhere in your mind of the potential for a rejection here and then coming back the other way. 30-minute chart. I think today for active traders, you can use this 439. You get a break above. I think you can be long. You've got a gap here, $1 wide. So you've got an opportunity to get up to 440, break above and fill that gap. And just remember, for you active traders, and this speaks to how I trade, be defensive going into Powell. You're riding high, you got this, and you got this gap fill, and you're up a couple bucks on your position. And then, at 201, when that statement hits the wire, they pull the rug and you're wiped out. So be careful with that short-term stuff heading into Powell. Anything could happen. And if it were me, if I had anything on that had the potential for that, I would be taking it off. So Q's 2 hour. We had this run up. We topped out. They pulled the rug yesterday. What I've done is add on the fib retracements, and you can see how nicely the price action followed the fibs and followed our predefined levels. We came right down to the halfback, which is 50% give back of the initial move. So now we got to hold 361 going forward. We can wobble here. We can, go higher, but to prevent any further downward move, we got to key off at 361 at that low. So if we were to come up here and then roll over, you break that low, that's going to bring in more sellers that would open the door to 358. And then, if it's a rush to the exits, we'll be back down here at 352 again. So for today, though, on the upside, I think this 365.50 is a decent level to shoot for. Here it is on the 30-minute chart. You can see that we're in between the range. If you're super sharp on the open, you can use this 364.5 as a pivot point. But what I usually like to do is wait for a level. That is, if you get a pullback into 363.50, I think you can buy that here for a move higher with a stop just below. Or if they, have the open and you come up here to 365.5 and you break above, then you've got a clear line to shoot against on the upside with a stop just below. And then your next target will be 367. The next level higher, and then of course, if things get all bullish again, we'll be up here 368.50. IWM small caps continues to be interesting. We had the gap down yesterday, and we came down here into the 215s. I was surprised it didn't come down here to this. All the way down to 215 right here where we had a decent little level, but it reversed before then. So today, I think you can just use this 218 level as a pivot point to come up here, potentially fill this gap and make a run up to 222.50. And if we roll over, of course, back down here to 215 and potentially 213, and then a back test of 209 if we go the other way. Now, for longer term swing traders, I've got two levels that I'm focused on. The breakout level right here at 222.50 and down at the bottom of the box. If you recall, on our daily chart, we've got a consolidation lows down here. Actually, I think it's 212.50, and this was an undercut. But down in here, you're either going to take a long against the bottom of the consolidation range, or there's going to be a breakdown in which the whole market potentially rolls over, and then you're going to want to get short against that on the way down. So if you're an active trader, by all means, try to make money in here. If you're a daily time frame or longer swing trader, I would just wait until you either break out of this 222.50 or you break down from below. And then here on the 30-minute chart, you've got the detail here with the little gap, and then you can see this this zone here has been a problem. So let's move on to FATMAAN. That was where a lot of the action was yesterday. Facebook had a very interesting after hours reaction. Google, as you know, blew the numbers out of the water. And then Facebook had a big aftermarket reaction. Went from 367.50 up to 375. And that's where it sits this morning. And I guess that was a reaction to Google's blowout numbers on ad revenue, which is a read through to Facebook. So now heading into earnings this evening, you get a breakout above 375. You can see this thing run into earnings. Here is the measured move out of this bull flag. And then you'll have to decide if you're going to hold through earnings or get out. If they look like they're going to sell this morning, then you could get a move back to the bottom of the flag. But I think most likely because of the Fed, you're going to see some range-bound action today. If you get a breakout, you can buy it and then make sure you close either before Powell or before Facebook if you're just a short-term trader and are not committed to holding through earnings. Apple was a little soggy. These are all projected numbers, of course, because the after-hours action. So I've approximated where I think they're going to open. And when I looked at 6 o'clock, 5:15, Apple was down here around 145. So you've got a gap above, and you've got some support down here at 144 and then 141.50. I would just play that range. And then if you get a breakout back above 147.50, then the door is open for another run up toward 149.75. I did put this in as a double top. Why? Because we got rejected here, and we had bearish divergence in place. And that's a recipe for a double top. And that double top would trigger on a break below 141.50. And then you can take this distance from 149.75 to 141.50, and then you can project it down, and that would be, down in the low 130s if that double top were to trigger. So keep an eye on that. Tesla. This 625 zone has been good support, but other than that, it's just been whipsawing between here and 665. If you're actively trading that, by all means. I mean, that's that's basically a $40 range. You can make money on that if you get a move like yesterday where they sold it. That was a great intraday trade. So if that's your thing, use your levels to your advantage. And so now the next point will be either a move up to the top of the range or a move back down to 625. And if you break below 625, you're going to 595 for sure. And if you break above, you're probably going to 690 for sure. So use those ranges and use those levels to your advantage. Microsoft also had a very interesting aftermarket session yesterday. It was down here in the 277 area. It had sold off, and then like an hour or two after earnings, they rocketed it back up. And I was looking this morning, it's up here at 290. So there was some significant delayed reaction buying of Microsoft. So we're right back up here towards 290. That'll leave a gap below that would have to get filled. And we've also got a gap down here that never got filled. But you get a breakout above 290, then you've got a great level to shoot against on the long side, having taken out all this resistance area. So I think your key level today is pretty clear. If it holds, if that pre-market action holds up near 290, that's definitely your pivot for today. And yeah, I continue to like Microsoft. I mean, all-time highs you got to buy, right? So that's right where we're at. Amazon, more interesting action. They whacked that yesterday morning, brought it back in here to this 35.90 area. I did put on the fibs, which is in this light blue color, and you can see that the Fibonacci's aligned perfectly with the support levels. So we go up here, we come back 61.8% right into this level, right into this support, and that's where it held. So when you have an uncorrected advance, which is basically this, we had how many candles? 6 or 7 candles that could not get through this 37.10 level. And then you start to see it breaking away, breaking to the downside. You can immediately put on your fib retracements and then try to line those up with your support levels. Like this would have been an area to be not concerned, but to be looking for a reversal. Didn't get it. It went down to the next level. And there you had 3 candle touches at this level. And then you had the doji. And so that was a higher probability entry. You could have, put your stop just below, knowing that you had the 618 pullback, knowing that you had this prior support, and then taking a shot on the long side if that's your thing. So today, remember we've got Amazon tomorrow after the bell. If you get a break above this 36.35 area, I think you can get long and look for 36.70 and higher. But that'll all depend on, pre-market run. Google, massive beat. Unbelievable numbers. Really was the only one that did anything close to a moonshot. We're up here at 27.50. That's going to leave almost 100. Well, what do we got here? We got a $110 gap from 27.50 to 26.40. So I'm not expecting a fade, but expecting more of a gap and go. It's going to take a little while for this to consolidate, I would imagine. But anything north of where it opens, you can be long with a stop just below. And if for some reason there ends up being market turbulence, that's a nice gap fill to shoot for on the downside if we were to get that. Netflix is just kind of hovering here above 515. You can use 522 as your next target if you're long. Not really the focus of what I've been looking at after this downdraft. I think it's just going to consolidate here for a little while, gather some energy, and see where the rest of the market goes in the days ahead. SMH, rug pull. Look where it stopped. Look where it stopped. Right at the bottom of the box of this $10 consolidation. That would have been a great play. I missed it. I wasn't, my head was not in the game at that point, but that would have been a great entry to take a shot at the low side of the box, and you got that perfect touch, and then a nice move off of that. So today you've got this midpoint at 252. I think you can be long above, and I don't think it's a place. Well, you can short it if the market gets weak. So this was a down move and a half back. So if it rolls over from here, could come back down to retest this low. But I'm hoping for the upside. And if you can get a good entry here against 252, you can look for 256. This was the AMD trade I talked to you about this morning. I got this nice spike up here to 94, and I guess I was too greedy to take it. And just a couple minutes later, it was back down and losing money, and came all the way back. So today, I think just see how it reacts. I think we're in here in this 92 area. I want to see a breakout of 93. I think that's a resistance level, and if it were a breakout above 93, I think that opens the door up to 95. Now, just to wrap up here, there's a ton of bracket trades out there, and I've detailed a bunch of them for you. But if you're new to the channel and don't understand what a bracket trade, here's what it is. The example that I have is UPS yesterday. We had a gap down. This was pre-market gap down, and then the trading range yesterday was from 198.07 to 190.26, and I've got that boxed in blue. So what you do in a bracket trade is you set an alarm at 198.07, and you set an alarm at 190.26, and then you wait. What are you waiting for? You're waiting for a move higher where you can get long against this 198.07 and look for that gap move up towards 210, or you wait for a breakdown below the range, below 190.26, and it just so happens there's another big prior gap below. So you get a break below 190, you're coming into the 200 at 180, and at that point probably we'll just go ahead and fill the gap to 175. So this is a special situation where you've got good sized gaps above and below the range, yesterday's range. So this is a good opportunity trade. Even if it's the only one you set up, you've got $10 of upside and $15 of downside on a break of that range. So that's where you set your alarms. And what I've done for you, I'm not going to go through every single chart, but I've set it up for you. There was a sympathy move on FedEx, and so you set your alarm at 288.38 and 279.12, and this was the prior close. So you can see that there's what's that? Let's just call it $10 of upside into that gap, and then you've got Polaris. There's your range to alarm. You've got $5 of upside. This NIU, I believe they're a Chinese EV company. Gap, here's your range to alarm, and then you got Logitech was a big gap, and then you got Jinko Solar, and Lamb Weston was a big gap as well. And although NIU and JKS are Chinese stocks, they had held up pretty well in that in the China turbulence, and it was just like yesterday that they really started to move. So I have not included the Babas and the Baidus and the JDs and all that China stuff in general, just because they may not respect the technicals as well as a domestic stock for sure. Why? Because they might start rebounding, and then some political announcement wipes out the trade in 5 seconds if they decide to pull the rug or drop the hammer, whatever metaphor you want to use over there. But I think these are interesting setups. But I would, if you just want to take that off the table, you still got plenty to worry about. You got UPS, FedEx, Polaris, Logitech, Lamb Weston. And tonight there's going to be 5 more, because every time on these earnings you're going to get a gap. And so I really like these trades. They're well defined. You can set your alarm. You can sit back and wait, and then you can go for a high probability either gap fill, or if the market rolls over, then you got an objective downside entry for a short. So let's leave it there. Plenty to look at today. Don't get caught in a JPAL trap, and then we will hit it hard. If I see a midday note, I will send it out to you. So new subscribers or new listeners, hit the subscribe button and the alarm bell. Jump over in the show notes. There's a link so you can give me your email address, and that way you'll get all my content throughout the day. Midday notes, trade ideas, anything that I might see, I certainly pass along. You'll also get an invite to the trading room. We had 4 or 5 guys yesterday join the room, which is great. And then longtime listeners, thank you so much for helping me build this channel by passing the link along to your trading circles, your social media outlets. It's great. And leave me a comment. Give me an idea for content, or leave me a comment below. And also, don't be afraid to request either a chart setup, to review a sector. I'd be happy to knock that kind of stuff out for you. So let's leave it there. Have a good day of trading. This has been Chris Buss with Trader's Profit Compass. Talk to you next time.